welcome to this video. Today I'm going to talk about market liquidity. Introduction to liquidity. Liquidity represents one of the most important concepts, aside from market capitalization, that everyone needs to understand when trading or investing in cryptocurrencies. Liquidity is the degree to which a particular asset can be quickly bought or sold without affecting the general stability of its price. In simplest terms, liquidity refers to the ability of an asset to be converted into cash easily. The most liquid asset in existence is cash, since it is very stable and can be readily accessed and easily spent on buying, selling, paying debts, or meeting immediate wants and needs. Therefore, cash is commonly used as the standard to gauge an asset's liquidity. So what is liquidity? Liquidity is the ability to exchange assets into cash and cash into assets easily, quickly, and at no cost, or at least very little cost at all. So looking at what liquid assets there are. So liquid assets are made up of bonds, mutual funds, stocks, currencies, cryptocurrencies, commodities, and then non-liquid assets, real estate, antiques, art, and furniture. A common similarity among liquid assets is that they all have already an open market to be traded on. This means that all these assets are heavily traded globally in different exchanges with stable prices. For non-liquid or illiquid assets, they are usually not traded in public exchanges, but are more commonly traded privately. This means that prices of illiquid assets can vary by a huge margin and can take a significant amount of time to complete. Essentially, the harder it is for an asset to be turned into cash, the more illiquid it is. Liquidity refers to the ease in which you can enter and exit a particular asset or currency. So, let's have a look at the importance of liquidity. In the context of cryptocurrencies, liquidity refers to the ability of a coin to be converted into cash or other coins easily. Liquidity is important for any tradable assets, including cryptocurrencies. A higher liquidity in the marketplace is preferred since it brings about the following advantages. So, looking at the importance of liquidity. Liquidity in the market, number one, brings in fair prices. Number two, brings in market stability. Number three, quick transactions. And number four, more accurate technical analysis. So number one, better and fair prices for everyone. In a liquid market, prices are much fairer for market participants due to large number of buyers and sellers. For instance, a robust marketplace with high trading activity ensures that sellers would sell at competitive prices so as not to lose out, while buyers would bid at a higher price according to their level of desperation, thereby creates an equilibrium market price that is equitable for all. A stable equilibrium price is a sign of market stability and ensures that market participants are not disadvantaged. Number two, market stability. High liquidity ensures that prices are stable and will not be prone to large swings in the market due to large trades. For instance, it is very easy for whales, term for individuals with huge amounts of money, to significantly influence prices, or worse, manipulate prices. In illiquid markets that have little market activity, a single buy or sell order would create large swings in the cryptocurrency prices, which contributes to increased volatility and risks for the general market. In a liquid market, prices are stable enough to withstand large orders due to the presence of many market participants and their orders. Quicker transaction times. It's much more convenient and easy to buy or sell the cryptocurrency of your choice in a liquid market. since your buy or sell orders would be filled much faster due to the greater amount of market participants. You can quickly enter or exit a trade instantaneously, which is sometimes critical in the fast-paced cryptocurrency markets. Number 4. Increased accuracy for technical analysis. Technical analysis refers to the study of past prices and the use of technical indicators and charting patterns to predict cryptocurrency prices. Though many disagree with the accuracy of technical analysis, it is still a widely used methodology in understanding the general market and trading. Price and chart information in a liquid market is more developed and precise, thereby enhancing its accuracy. The foreign exchange forex currency market is the most liquid market with an average trading volume of over $5 trillion daily. Okay, so we're going to have a look at factors that affect liquidity. So, number 1, trading volume. Perhaps the core factor that affects liquidity in the cryptocurrency market is the fact that the majority of those who own cryptocurrencies engage in investing and trading coins for price appreciation rather than use them as a medium of exchange. Volume refers to the amount of coins that have been traded in exchanges, usually in the past 24 hours. Essentially, the volume reflects the market activity of a specific coin. A higher volume indicates that more people are buying and selling the coin. Higher trading volume equals more liquidity. Cryptocurrency exchange. An exchange is a marketplace where assets are traded freely between buyers and sellers. A higher number of cryptocurrency exchanges signifies greater market and trading activity, since there are more avenues that enhance market liquidity. There are currently over 200 cryptocurrency exchanges, 21 decentralized exchanges, and a handful of peer-to-peer platforms in existence today. There are many other exchanges that are currently work in progress and due to launch in the near future. Number 3, more crypto exchanges equals more liquidity. And just to stop for a second, we know that Bruce has mentioned that the team leaders are trying to get us into Binance, which will definitely make a huge difference in the liquidity of the G999. So more crypto exchanges equals more liquidity. Acceptance. The success and viability of any currency depend on the acceptance of the masses, or at least a huge network of individuals that can actually use it for something. That is why it is important for cryptocurrencies to be accepted by merchants and businesses as a mode of payment, so as to increase the usability and utility of cryptocurrencies as a viable medium for transactions, which is perfect for the G999. We have that platform. Bitcoin and other cryptocurrencies are fast gaining traction and acceptance as a mode of payment, particularly in online stores. This current moment, there are more than 370,000 vendors across 182 different countries that accept payments in cryptocurrencies, including giants such as Amazon, IBM, Microsoft, Apple App Store, PayPal, and eBay. Greater crypto acceptance equals more liquidity. Regulations. The laws and regulations of different countries can also impact cryptocurrency liquidity. There are certain countries that ban either cryptocurrency trading or the use of cryptocurrencies in dealings. This would impair the liquidity of that specific country, since a ban on cryptocurrency equates to a ban on cryptocurrency exchanges, which would mean that it would be harder for users to buy or sell cryptocurrencies in that country. Anyone looking to own cryptocurrencies would have to privately find a seller or rely on peer-to-peer platforms. Therefore, the liquidity in that country would be extremely low. This usually results in higher prices since there are few sellers to cater to the high demand of cryptocurrencies, which gives the seller a higher bargaining chip to increase prices. And lastly, lesser restrictive regulations equals more liquidity. And I'm not going to read too much into that. I think everybody understands what that means. So guys, just to recap, when we have a look at the G999 at the moment, we can see, and let's quickly just have a look and take a look at perhaps maybe the order book on two of the exchanges. We'll have a look at HitBTC and we'll have a look at BitForex. So coming to the order book on HitBTC, so this is the HitBTC exchange platform. So coming here, looking down, scrolling down, we can see the depth chart is showing in favor of the buyers. But if we have a closer look at the actual order book, we can see that there's not a lot of liquidity in this order book. We can see there is an order in here with approximately 716,000 coins, which sounds like a lot, but it's not actually a lot. If we have a look at the total, we're looking at total volume. We're looking at 4.1 Bitcoin. 4.1 Bitcoin on the buyer side, and we're looking at just over 7 million on the seller side, which in the bigger picture it's not really a huge amount of cash at the end of the day. And we can see we are moving between 19 satoshis. The spread is between 19 satoshis and 19 to 1. So it is a very small spread, which is a good thing. But unfortunately, we just don't have the liquidity. Liquidity meaning that there are just not enough buyers and sellers on this actual order book. We can also have a look and see. We scroll down to what's actually being bought and sold. If we have a look here, you can see we've got the traders' IDs, okay, which is not important. Then we can see the prices that they're being sold for. Mostly 19 satoshis. But if we look at the amounts on the right hand side, you can have a look. 80 coins, 50 coins, 130 coins, 70 coins, 70. I mean, if you scroll down here, you can see the amount of coins that are being traded is absolutely minuscule. And just to give you an idea, I mean, I'm not going to do it now, but you guys can do it. The traders that are interested in this can do it themselves. Go and take a look at, for example, go to Bittrex or even Binance and go and pick a coin. Take Digibyte, for example. Go and have a look at the amount of Digibyte that is actually being traded. So, we can see a little bit of. I think BitForex is a little bit better. If we take a look at BitForex, for example, so if we take a look at BitForex's order book, we can see also the order book is not very big. You can see this is kind of the whole buyer's order book over here, running down from 1 Satoshi all the way up to 18. And like I said, this is BitForex's order book for the Bitcoin G999 pairing. So we can see here that even here, although this looks a lot better than HitBTC, because we can see that there's a lot of stacking going on here. Stacking means that it's not individual orders. All traders will know exactly what I'm talking about. So if we have a look and see, we can see that there's a large amount of coins which are sitting here at 18 satoshis and all the way down. But once again, not a lot of movement. If we have a look, not a lot of liquidity. If you add up all of these coins, you get to a number that's not really impressive. If we take into consideration how many people actually own the G999 compared to how many people are trading the G999. It's very, very little. And it comes down to, obviously we know that 80% of the people, or at least close to, I can't say exactly, but at least 80%, 70 or 80% of the people that own the G999 are basically hodlers. They're just sitting, holding the coin and waiting and expecting the coin to go up over time, which I'm sure it will. We can also take a look at, if we have a look at CoinGecko and we have a look at the markets, we can see, let's have a look at the markets and see what's going on in the markets. We can see the price, we can see the spread, okay, which is pretty small, it's pretty decent. We're looking at plus 2% depth, minus 2% depth, that would be the difference in the spread. Then we're looking at 24-hour volume, also very low percentage wise. Let's have a look. Bitforex, G999, Bitcoin. Look at the, look at the volume percentage. It's not even 1%. If we scroll down, look, HitBTC looks like it's got a little bit more volume, and we can actually see that if we go back to the HitBTC. Let's have a look at we can see sometimes it's blinking on and off. It's pretty active. So although the amounts are very small, there is considerable action going on HitBTC. But yes, we can see, and then on the right hand side, the trust score. So Bitforex on G999 Bitcoin, we're looking at trust score is good. We estimate that this exchange pair has a good liquidity. Well, okay, so we can say there's a bit of liquidity over there. If we look at the numbers, they don't actually add up. So then going down below that, we have a look at Bitforex G999 USDT. Trust score is fair. We estimate that the exchange pair has a fair liquidity. On SouthX exchange, also fair. But still, when you look at the numbers are not really impressive. Then we go below that and we see something not really too good here. If we have a look at HitBTC, there's a message that comes: we have received multiple instances of withdrawal issues pertaining to 2FA resets and KYC from users. Kindly exercise caution with your funds and do clarify the details with HitBTC team regarding withdrawals, deposit terms prior to using the platform. So there's obviously an issue going on here with HitBTC that I think the team leaders need to address, because this is not a good sign, especially for other traders that want to come into the market. When you see stuff like this, it's not doing the coin any good. So this needs to be sorted out. And if anybody is watching this video and you perhaps maybe mention to your team leaders that something's going on here that's not pretty too good. Okay, so we won't harp on that, but let's move on down. So that, in fact, all three of these are from HitBTC. Then we go to BitX Live, and we can see the trust score is low. We estimate that this exchange pair has a low liquidity. So with the USDT pairing, and then if we go down to Coin Super, well, this is not good. We're looking at trust score is unknown. We do not have sufficient order book data for this exchange pair. So guys, once again, I'm a very positive person, and I don't like to harp on negativity. But come on, all the traders in the world, if they're coming and looking at this, people who are maybe interested or want to have a look at the coin, when they see this, it's definitely not a good sign. So we need our team leaders to address this issue as soon as they can. Okay, so this is on CoinGecko. If we move over quickly and go and have a look at CoinMarketCap, we kind of see a very similar situation, although the confidence levels on some of the coins are pretty high. I'm not going to go through all of this. You guys can actually log on and just take a look at the confidence levels yourself. But what I want to focus on is the liquidity here. We have a look at the liquidity. Once again, we can see very, very low liquidity. So, just to kind of recap here, folks, the bottom line is when we have a look at the price of the G999, and as traders, maybe the hodlers are not too interested in this stuff there, but as traders, when we have a look at this and we wonder to ourselves, how can the price be so easily swayed, so easily moved, if there's such little volume, on the exchanges? And it's very simple to see. We have to realize that liquidity, and coming back to this article that I read for you guys, the importance of liquidity, we can see liquidity brings fair prices, it brings market stability, it brings quick transactions. Or there we can see, when we're looking here, what's going on here, we see all of this here. Why is BTC having problems with KYC and withdrawals and this type of thing? So these small issues need to be addressed. We want to go and see the coin in a few months' time on Binance. Binance is never going to let any coins onto the exchange that are not running smoothly. So I'd say that we've got a lot of work to do, and if we want to see this coin go up and increasing value without waiting 20 years, we need to bring more liquidity in the market. You've got, in all markets, you've got market makers and you've got market takers. Market makers is what we're looking for. We're looking for people and traders to come in and buy their coins on exchanges, put in orders, fill the order books up with liquidity. And once that happens, we will see more stable markets and more stability for the traders, and going forward with the price of the G999. Alright, well guys, I've already gone on quite a long time. I don't want this video to be too long. It's already 22 minutes. But I thought I'd just share this with everyone and hope this sheds some light on what's happening with the price of the G999 at the moment. So thank you very much all for watching, and I will see you in the next video. Thank you.